So can you confirm if they can see anything?
Can everyone see us now? Yes, I think they should be able to. Hello, everyone. Can you confirm if you could see us and hear us?
And see the screen as well. Okay.
Fantastic. Great. So we're going to have to do a recap again.
Absolutely.
Hello, everybody. Hello, everyone. Good afternoon. Audrey here from Health Cap Africa. Welcome to the November edition of our monthly webinar sessions. Thank you for coming. Last month, we looked at the African healthcare ecosystem, the health tech ecosystem as well, and the role of healthcare professionals in the transformation of the ecosystem. And true to theme, this month, we're looking at the financial ecosystem or the African financial landscape, the Fintech ecosystem, and the role of finance professionals in the ecosystem. Our apologies for the technical difficulties. Everyone can hear us now, yes? Can everyone hear us now and see us now?
I think so. You can see us.
Okay, great. Yes, so as I was saying, this month we're going to be looking at the financial landscape, the African financial landscape, the African fintech ecosystem, transformations, regulatory environment, the role of finance professionals in the ecosystem, and what our outlook is for this space. And this month, we have a finance professional with us who also happens to be a friend of Health Cap Africa and a player in the fintech, space, Mustafa. Thank you, Mustafa, for joining us.
Thank you so much, Audrey. Such a pleasure.
Great. So just to jump right into it, there is no question, it's undisputed the effect of technology on the global and African ecosystem, especially the financial landscape. Transactions are a lot more easier. You see new innovations and technological plugs for problems that have always been in traditional system. Digital banks everywhere, neobanks everywhere, the introduction of the fintech space, and how that has created a lot of interest from the international and local market in the African ecosystem. We know that the fintech vertical is the most active and the most funded in the African venture capital and startup ecosystem. And it's very interesting to always see that finance professionals are usually at the helm of that change, of that transformation, of the new innovations that are always brought into this space. And Mustafa, being a finance professional yourself and an innovator in the fintech space, would like you to take us through your journey, your perspective of the ecosystem, what you think about the current situations, turn of events, especially with things like the Startup Innovation Act, things like that. So please, you have the floor.
Hi, can you hear me? And can everyone hear me?
Yes, I can hear you. I think everyone can hear you as well.
Perfect. Thank you again, Audrey. And hello, everyone. My name is Mustafa. I'm the CEO co-founder of Capsule Technology. And I said some things earlier, and I'll just go back again. All right. So my experience has been, it's been between strategy and finance, and that has been like close to a decade. Doing this consistently over time. I've been running Capsa now for 2 years, full time. And prior to Capsa, I'd spent the previous 8 years of my life split between banking as well as management consulting, right? So I'd mentioned earlier that it wasn't deliberate for me at the beginning to say I wanted to be a finance person, right? At some point in time in our lives, well, you're not too sure what exactly you wanted to do after school. But something that has been fundamental for me from the get go, where there were two things that I just like, right? I had this very huge interest for business models. I would always see a business and I'll be interested in knowing how the business work, why are they profitable, how do they make money, um, know why would business A survive and scale so well so rapidly, and why would business B not survive, right? So those were things I spent a lot of my time reading about during my time in school, and at the same time, I also had this very big interest in economics. The more specifically from a microeconomic standpoint, right? Understanding the units of businesses and how things work, the concept of marginal utility, marginal cost, marginal revenue. Those are all the things that I spend a lot of my time studying. Then again, doing economics, you have no choice. You have to do macroeconomics, right? So those are the things that really influenced my choice of career at the end of the day. And right out of business school, I found myself doing banking. And I was also opportune to work with executives of banks, and that really gave me a very broad perspective of what banking is and what banking could be, right? And from that level, I delved into origination and into investment banking and practically bringing out structuring deals, bringing out deals, and working with your clients to raise money to fund those deals. And I was also opportunity to be part of some landmark deals in Lagos as well as on the national scale. Then the next was I went into consulting. I'd found an opportunity to see how I could work as a consultant, fully focused on the financial services space as well as the international development space, and that led me into advising banks, especially C levels, executives of these banks. And at the same time, I also got the opportunity to lead projects or engagements where we practically had to set up banks from the scratch, right? At least I would say I set up like two of the banks that you have currently running in the country with the promoters as well as the CEO from the scratch, putting together all the documentation, the business plan, the financial model, and engaging CDN from end to end and bringing these banks to life. So the commercial banks and one merchant bank, right, currently in operation. So those are the things I did extensively during my time in consulting, and I was so opportunity to work with the likes of the IFC, the Foreign Commonwealth Office of the British government, as well as the World Bank Group itself. And all these experiences I've had across board were the things that more or less shape my own ideas and my own perspectives and in setting up CAPSA at the end of the day, right? So that's who I am, and that's what I've been up to in the last 10 years of my life. I think I'll just go briefly into the presentation. It's a very short one, and it just speaks to certain key things. It just speaks to certain key things with respect to one about the introduction and background of what CAPSA technology is, what exactly we do at CAPSA. Then spoke broadly about what the challenges are of fintechs today that we see in ecosystem, and three talked about the power of fintech, which again is something we all know. Then the potential of fintech and what finance professionals could potentially do in that space. Again, very short presentation, and on each of these we just have quick points and a single slide for them. All right. So
Okay.
let's start. What is CAPSA? CAPSA is essentially, we call it the premier alternative financing platform, right, for businesses in sub-Saharan Africa. And what exactly does that mean? It means CAPSA is the first to create a solution that allows businesses to optimize their balance sheets to fund working capital or to fund growth, right? Think about it this way. Ideally, for many businesses, um, prior to now, the way they meet their working capital needs is to take perhaps you take an overdraft from the bank. That is, if you are qualified enough to get an overdraft from the bank, or you borrow from loan sharks, digital lenders, or you go to family and friends who are nice enough and do have excess cash to give to you, right? So that is the space that we saw, and for small businesses, it's tougher. Tougher in the sense that you would imagine many of those businesses might have to wait, if they are lucky, 30 days, and if they are not lucky, as high as 90 to 120 days to get paid, right? So it means their cash is stopped and those businesses can't scale or grow as fast as they should, right? So what CAPSA has done essentially is to build a platform that allows businesses, especially small businesses, to be able to sell their receivables. Again, the key word here is sell. So they're not taking a loan, right? They can optimize their balance sheets, sell your receivables or your invoices to a third party who can buy the invoice of you at a discount, and you go out of the picture, and the third party waits for your customer to pay in the 60, the 30, the 90, or whatever the tenure is, right? So what this does is it gives those businesses more room and more flexibility to meet their working capital, take on new business opportunity, and scale as fast as they should. They don't have to bother about the obligation of paying monthly interest payments on loans and things like that, right? And for the financiers or the lenders as well, what our solution does for them is it gives them uh, a new asset class which they can put in their books, right? So doing this for 2 years plus, and one of the things we've come to realize is many lenders are actually interested in lending to small businesses, but they've been looking for the best way or the most secure way to make this happen. And we've built a solution that makes it secure and quite exciting, because at this point it becomes a trade. It's a buy and sell market, right? Like I mentioned, we've been in operations a little over 2 years, and in that time, we've been able to empower over 400 small businesses. And sorry, the sign is not there. That sign there is Naira, and we've empowered them with over 17 billion Naira worth of transactions, right? The founding team has over 30 years cumulative experience, and this cuts across engineering, finance, sales, and marketing. And these are in different territories, be it Nigeria, emerging markets, as well as Europe and the US, right? And the fundamental thing about the founding team of CAPSA is we've always known each other. We were in school together. We've done businesses before CAPSA together. And now we are bringing all our experience, our expertise to be able to run this business and transform what working capital or alternative financing should be for businesses in this part of the world. That said, to the right of your screen, you will see I have something like 3x 2.5%. And just to give you a sense of the impact CAPSA is creating for businesses, right? On the average, we've been able to enhance businesses on CAPSA to do more, right? We've seen like a turnover growth of 3x in a month for these businesses. And what does that mean? For instance, for a business that could maybe make only one supplies before in a month, this business can now make 3-4 supplies in a month, right? Because their cash is no longer tied down. They can supply and immediately convert that invoice to cash, then go make the next supplies to another customer, and they don't need to take a loan, right? And we've also seen businesses use our solution to hedge against inflation. I'll give you a very good example. In the case of diesel suppliers, right, over the last, say, 4 to 5 months, we've seen a lot of interest from diesel suppliers because the price of diesels have been very volatile, right? So you don't want to supply diesel to a customer and you have to wait 30 days. By the time they're paying you, the price has moved, so you're at a loss. So what we've seen happening is the interest from this guy is they're able to supply quickly within 24 hours or less, convert the invoice to cash, then get another supply. And that way, they are not left stocked because they can meet up with price increment at every point in time. Then the other major impact which we've seen is we've been able to save businesses on financing costs. On the average, about 2.5% monthly, right? And two things drive this. One is the fact that our platform is built to be it's built like a trade, so it's a competitive bidding process. So as unlike where lenders can just tell you this is your rate, take it or leave it, here you have multiple lenders who will make you an offer, and you can select the offer that makes sense. So because these lenders are bidding to buy the transaction, the supplier or the business is better off, right? And number two is the quality of the counterparty or the quality of the transaction. So we've referenced the transaction in a way that we've taken out all the key risks you would typically think of, things like execution risks, diversion risks, and the like. So it's more safe on CAPSA, and I dare say with 17 billion, no one has lost a unit of their capital so far on the platform, right? So that's on CAPSA. So what do we see as the key obstacles to the growth and development of fintechs, right? And I'm just going straight into this because Audrey has already gave the background as to what fintech is and what the kind of impact fintechs to have in the ecosystem, right? But we've been able to like bring together 6 broad points to say these are the major obstacles. And to be very clear, these obstacles are both from the standpoint of the operating environment itself, as well as the standpoint of the promoters or the founders or the people running the fintech business, right? And this point are in no order of ranking or importance, right? The first point here is what we have termed as the infrastructural deficit, and I would take it this way as to what infrastructural deficit is. For most of the things that we build today, right? If you've ever tried to build a solution in this space, right? You notice getting access to certain infrastructure or being able to piggyback or ride on certain infrastructure could be a challenge. Once upon a time, it's also easy to verify details using NIBs, right? Because the information was there on NIBs granted access, and all of a sudden that access itself was yanked off, and people started having to go through other third parties to get direct access to NIBs, right? And we've also seen issues regarding broadband spread, right? And data itself shows that majority of the concentration of broadband or internet penetration is in like few areas in urban centers, concentrated in cities like Lagos and some other southwestern states, and up to the point of Abuja, right? Internet penetration on a national scale level is still less than 30%, right? The last time I checked the data, which is quite recent, on a national scale level, because you still have a lot of places where broadband itself is limited. People have lesser access to the internet and things like that, right? Another example I could easily cite with respect to infrastructure itself would be in the areas of. Sorry, can everyone still hear me? I just want to be sure. Everywhere is a bit quiet. Audrey.
I can hear you. I don't know if everyone can hear us. Can everyone hear us, please?
Okay, I've seen it. Okay, perfect. Eric just responded. Okay. And I'm sorry, Audrey, how does this work? Can people ask questions as we go on?
Yes, they can. So there's going to be a question and answer segment after you.
At the end. Okay.
Yeah, people type their questions.
Okay, perfect. Right. So yeah, infrastructure deficit mainly from a broadband standpoint, and having limited access to certain critical infrastructure that could spur innovation, right, or make it easier for people to build solutions and for them to test them, right? The second point is with respect to capital itself, right? I know prior to 2023, Africa had this huge expansion of inflow investment into the fintech space, or into the startup space itself, right? And Nigeria, got a huge chunk, if not up to like half or more of those inflows, right? But nonetheless, when you compare the volume of investment or capital that have gone into the fintech space vis-a-vis other regions of the world, then you begin to see that not so much capital has been deployed to this space. And for me, the cost itself is not necessarily about the foreign capital that come in. It's more about domestic capital, right? We've not been able to have domestic capital being mobilized and channel those domestic capital into funding the fintech space or the startup space and to drive innovation. I.e., we know that we have trillions of naira in pension funds. We know we have big businesses that make billions and trillions in revenue, but they've not been like a proper framework as to how a percentage of these funds could be channeled into the fintech space and be able to use it to support businesses and for them to grow, right? And for them to experiment and bring out innovation that will drive that space. The third point which we have highlighted is with respect to regulatory complexity. That itself it's something that has been a big challenge in the space, right? There's always this talk about innovation preceding regulation, and we've seen that happen a lot of times. But at the same time, we've not had this confidence that the regulators effectively back or are interested in supporting the space, right? And we've seen incidents of regulators coming up and just banning solutions or issuing statements that impact the trust or confidence of stakeholders in the fintech space, right? So no much clarity as to how regulation should work and what's the best way for businesses with ideas to work hand in hand with the regulators to vet those ideas and eventually go to scale them, right? We've also seen issues around trust and business perception. Again, we know Nigeria is a very low trust society, and for that reason, we've seen people being very skeptical of trying things new, of even supporting businesses or fintechs that are trying to innovate, right? And at the same time, again, some of those fears can be founded, right? We've seen fintechs or businesses who disguise as fintechs, and they've been able to use that platform to mismanage funds, been able to use that platform to embezzle funds itself, aside from mismanaging fund, right? Some form of either stealing and diverting funds that don't belong to them, customers deposit and the likes. Those things itself have not been very helpful in building the trust, because if the trust itself is not there, that itself is really going to affect the next point which I have there in terms of it being scalable, right? Because if you don't have people who if the reach of your solution is not wide enough and a lot of people are not happy to try or to use them, then you're going to have the issue of scalability from a trust standpoint. But we also have scalability challenges from not being able to piggyback on existing infrastructure to scale solutions, right? And I'll give certain examples as well. A key thing in scalability is distribution, being able to distribute your product or your solution across board, taking it to the last mile if this was a logistic business or things like that. But same thing applies in fintech. You want your solution to get to the end user. You want it to get to them in the most convenient way and manner, right? And the infrastructure to ride on that, it's not really there. And in cases where you have them, it is quite difficult, or the access to those infrastructure are quite limited, right? I'll give examples of the banks, or examples of let's say the Night Post, right? Or examples of telecoms, right? So these are established institutions, right, that have wide distribution across board, right, in different parts of the country. But at the same time, those infrastructure have really been should I say, shielded from fintechs, and a lot of fintechs have not been able to leverage this infrastructure to scale, because what that would do is make it easier, and your marginal cost of scaling would be far cheaper compared to trying to build up those infrastructure from the scratch, right? So that itself has been a very big problem, and it has made it super hard for fintech itself to scale. And the last point is it's just what we call effective risk management, and that itself it's more within the fintech space itself, right? A lot of people go into fintech, right, without having, I would say, the prerequisite knowledge of what it is to run a finance business, of what it is to lend, or what it is to manage people's funds, right? And we've seen businesses who believe that the banks were not giving out credit because the banks were just being wicked or they don't know how to give out credit, and try to lend or try to give out credit themselves, and they've gone into big problems, right? Losing money entirely in that process. So one thing that's come out fundamentally strong is a lot of fintech promoters don't really understand the business of lending, right? And most overlook what you call risk management. And the truth is, when you look at lending, when you look at banking, at the core of banking are two things: risk management and treasury, right? So everyone can mobilize deposits. You can go and get deposit, but being able to ring fence or properly structure transactions and know who exactly you should be giving money to and who you should not give money to is very important. And also being able to manage those funds from a treasury standpoint and being able to allocate those funds and get returns that you paid if you've collected the money to itself is very important, right? So in my experience, I've seen that itself is a big gap, right? And people just think, get the money and give it out. And we've seen a lot of people being bounced in that space. And that is something that's been a very big hiccups in terms of big growth, scalability, and also the trust itself, which we have mentioned earlier in that space, right? That said, what ways has fintech been able to impact economies? Three key areas have been highlighted, right? And the first has been financial inclusion. We can't take that out, right? I mean, i.e., take the likes of OPay, the likes of Money Points, right? That have been able to take what you call agency banking to the grassroots. I mean, I tell people from experience, right? The concept of agency banking, POS banking, and things like that are not new, right? The concept of using your mobile number as your account number, as far back as 2013, while I was at the bank, these were ideas that we had. These were ideas that were launched. I remember Sterling launched agency banking in, I think, Marco as far back as 2013, right? These were all things the banks at different points in time. I'm sure different banks had this idea, had this concept. But again, because the banks are big, right? That's who they are. They're just big. They're more interested in the bigger transaction. The banks are not set up to serve retail or the inner streets, right? And because the cost profile itself will not make sense for them to do. But we've seen fintechs being able to take those things and make it mainstream, right? And that's a big way, one of the ways in which fintechs has been very, very helpful driving financial inclusion and making people that have never had access to banking services have access to them. Then another biggest gain has been with respect to efficiency gains, right? Being able to streamline operations, cut costs, and enhance productivity. And in this instance, I'll give Capsa as a classic example. So what Capsa does, right, in a traditional banking setup, that would typically take between, say, 15 to 20 working days to get it through end to end. But today on Capsa, you could list an invoice or list an asset, and within 48 hours or less, the entire process itself would be concluded and money would be in your accounts, right, for you to run your business. All right. So that is a very big impact. And I mean, if you want to look at the multiplier effect of what efficiency gains are in terms of costs, then it runs into hundreds of millions, if not billions, right? And then the last in itself is creating jobs, right? We've seen the likes of businesses that, I mean, 5-10 years ago were nowhere to be found, i.e. the likes of, I mean, the Pay Star, the Flutter Wave, Money Point, even Caps. I mean, just less than 10 years ago, none of these businesses were anywhere to be found. careers with respect to product designer, product developers, I mean, those product managers were like a bit odd, right? Just less than 10 years back. But today, right, with the youthful population of Nigeria, the fintech space have been able to create new career paths, right? Have been able to create jobs and and open up new frontiers that were not existent, and people are leveraging those frontiers to earn a decent living and also to take their families out of poverty. So where do we see most value creation for fintech going forward, right? There are two areas that we have highlighted. One is with respect to AI, right, and the other with respect to blockchain technology, right. I again, you might want to say it's the buzzword, but blockchain is what blockchain is. And I mean, I am a very firm believer in the blockchain technology, and I also believe it's a technology that would revolutionize a lot of processes in not just in Nigeria but in Africa. And the key reason why I'm a very firm believer of blockchains, right? For two things. One is the fact that it decentralizes transactions, or in decentralized processes. So things that you see as typically being centralized now become decentralized, right? Having giving more people access to participate in transactions. But more important than that is what you call transparency, right? Being able to make transactions more transparent. And when you consider the fact that not just Nigeria but Africa as a whole is a low trust is a low trust ecosystem or society, then you begin to imagine how technology that promotes transparency and make it easier for everybody to see the status of a transaction, or the status of anything being on the blockchain at every point in time would do. And again, it does this at a way lower cost compared to traditional technology. And more recently, AI. I also believe that AI is going to transform a lot of things. And going into the next decade, right, the amount of efficiency gain we will get from AI, right? I know people have there's this, I won't call it fear, but there's this concern about people losing jobs due to AI, due to automations of things, right? But what people don't look at as well is the gains from efficiency gains are things that could easily be channeled, right, and used to create new areas, new frontiers for businesses or for people to get employed or get people employed in other areas, right? So for me, the big thing about AI, it's more about the efficiency gains that it will bring, automation of processes, and the predictive assessments of it itself, right? So these are the two things I strongly believe would shape the future of financial technology in Africa. And everyone in Africa is in the fintech space is thinking along this line. And even for us as well as CAPSA, right? Beneath our technology itself, we have a blockchain component. And one of the ways in which we're looking at it is being able to tokenize assets and have them on the chain, and those assets itself could be traded with digital currencies, right? But again, it's not something we are making happen now, but it's something we built the foundation for, because we have a long-term view, and we believe that gradually, as regulation catch ups, as regulation gets a bit more relaxed, and the concept of digital currency also becomes a bit more mainstream and not for speculative purposes, then the use case becomes stronger. And in that case, we cannot deploy it. Even same thing with artificial intelligence, given the fact that we have a platform, and with all the data we've been gathering, it make it easier for users of the platform to be able to get the right kind of insight as to what assets they should be buying and what yield they should be getting from those assets down the line. I've said all these plenty of things, right? And I think this is the last slide for me to just wrap up. To say, hey, having said all this, as finance professionals, what are the ways, or how could the skill set be very um, be be very helpful in the fintech space, right? Coming into the fintech space for me, I've been able to highlight four areas that I think would be very helpful, and one of them is with respect to preparing statements or being able to model financials, right? A lot of people that play in the fintech space, like I mentioned, are people with little or no finance knowledge. These are people that have good technical skills from a technology standpoint. They could build products, but again, they don't really understand finance, right? So I see a lot of opportunities for people with good or people who are grounded in finance to work with these guys and guide them with respect to one, having to properly model your business. And when I say model your business, is not just building out the models, but being able to have the hard conversation about unit economics, right? To say, hey, man, if you're making X naira and you're giving, for instance, if I'm making X naira on 1 naira and I'm paying for me to make that 1 naira and I'm paying people 2 naira to make that 1 naira, it does not even make sense from the get go, right? In as much as you want to achieve growth, you want to grow fast, you need to find the right balance uh, between um, between growth, right? Between you growing fast and at the same time you being profitable or you being optimizing your balance sheet, right? So even my days in consulting and in banking, it has always been the conversation about growing fast, right? And how profitable you're growing fast, right? There's always been a conversation about scale and unit economics, right? So these are things I think being able to properly build a model out and let people see the impact of their decisions, what impact it has on the business, and how long it's going to take uh, to reverse those things would be very helpful, right? And again, that itself is tied to the role of a financial analyst who definitely provide those supports to fintech founders, right? I think fintech founders need to work a lot more with people with finance knowledge, and these people can provide guidance either from the modeling standpoint and telling them what the numbers mean and the importance of unit economics, right? And how you shouldn't your cost of acquisition should never at any point in time exceed the revenue you make from each customer at any point in time. Then the other 2 points with respect to raising funds. Again, it's easier to raise funds at a pre-seed level, perhaps at a seed level. But when it gets a bit more detailed, when you're getting to your series, maybe the series A, the Bs, and the rest, and you're perhaps going to IPOs, or perhaps you're saying to private equity, then it becomes a bit more interesting, and you need people that do have the firm understanding of finance and having those conversations, negotiations, to lead those conversations on behalf of the founders. Like I mentioned, a lot of founders don't have this knowledge, and these are areas where um, people with the finance expertise can come in, provide the support, and if you don't want to work as a full-time partner with these guys, it could be as a form of consulting services, right? And demonstrate the value to them, right? So that's all I have to say. I'll take a pause here. Happy to engage further and provide any other clarification that may be required. Thanks, Audrey, and thanks, everyone.
Great. Thanks, Mustafa. That was very enlightening. I think now we can ask questions, but before we open it up to the public, or it's already open to the public, I would like to know your opinion on the regulatory direction of the ecosystem, especially in Nigeria. So we know, like you said, Nigeria has essentially been playing catch up to, the rest of the big four markets. People like Egypt that had already um,
Mm,
had their central authorities or their regulatory authorities issued licenses to fintechs. Uganda partnering with the European Union to test out innovations to fill out the loopholes that they had in their system, and even Kenya
mm,
with their capital market
mm,
authorities. Now we have initiated the startup Nigerian Startup Act, and we hear the CBN governor give us, very interesting perspectives on their plan for the digital economy and the licensing environment, right? Which might mean that there will be stricter regulations for fintechs and also some sort of stability to an already fragmented ecosystem. I would think that that would give a lot more people comfort, even the government comfort, to invest more in the space, have people or have government agencies like sovereign investment authorities manage funds specifically for investing in the startup, right? How do you think, being a player in the ecosystem, how do you think this is going to play out over time? And what are the limitations or the advantages that the ecosystem would have from this direction that we're going in the digital economy?
Okay, I mean, thank you so much. One of my very senior friends, right, the CEO of one of the banks, once said to me that the difference between the banks and fintech is one is regulated, the other one is not regulated, right? That's just according to him. That's he called that as one of the core difference between both entities. But like I mentioned earlier, regulation would always catch up with innovation, right? That's a fact, right? Because innovation itself would come with its troubles. Like you would see, there being issues of mismanagement in the lending space, for instance, of funds, people not having the right processes or the risk management processes to give out money or to lend money, people not having the right corporate governance set up in their businesses, and things like that. So those are failure points that makes regulators to sit up and say, hey, how do we ensure these things don't continue? Right. So definitely regulators will always catch up. And for me, I strongly believe that it's a welcome development with what the CBN governor itself has said, right? And I think that is the direction we should all go. We should all go to, right? But in the midst of that, two things are very critical, right? Aside from saying it, we need the regulators as well to demonstrate it, right? And they'll demonstrate it by action. Action in the sense that the fact that if I have an idea and I decide to test out that idea, it does not mean I'm a criminal, or does not mean you can wake up tomorrow and just shut it down, right? So what the regulators really need to encourage are the concept of sandboxes, right? And make it super easy and super open for people to access there. Oh, if you have this concept and you're willing to test it out, we have a safe space for you to go and try and do anything you want to do, right? And really promote that concept and make it easier for people to gain access. I've seen some of the regulation sandboxes and the requirements are just too tedious. No one would really want to go through that process, right? So those are the things that really need to be promoted and decentralized across board for people to have access to, right? The second thing itself is in areas where regulation wants to catch up, right? They need to be this perception of it being an open hand or be a friendly extension, right? To say, hey, we see you're doing this, we've not captured it yet, but come on, let's discuss more and let's have a conversation of how this could go, right? And I think that itself would be very helpful, right? And then a last point that I would say on this as well is it's fine to want to regulate. It's fine to want to come up with new policies. But at the same time, we also need to be mindful that these businesses, we should be mindful of what is realistic for the businesses. So for instance, if you're telling a startup that you need a minimum capital of 2 billion or 5 billion to start, it's like dead on arrival, right? That guy is never really going to go for regulation, right? But if it's a thing of, oh, you can start with this and gradually can scale up your capital, or we can allow you operate or give you a window or things. So I think for me, those are the kind of things that we should encourage. And the good thing about the Startup Act, which I really like, is the Startup Act has made provisions for some of this and saying there'll be like a forum where founders or representatives of founders of fintech players can engage regulators on an ongoing basis. So I think that itself would help a lot. So I think the Startup Act, let me bring that home. For the Startup Act, I think that itself would be a game changer. and it will bring some sanity into the space. And at the same time, it will help define what each party should do and reduce this friction between the fintech players as well as the regulators, and it will make everyone feel at home, right? But what is left is for us to see the action of the promoters of the government that will implement the startup acts, and those actions will tell if they are being sincere enough and if it's going to bring the right impact for everyone. Andre? Can everyone hear me?
Can you hear me? Yes, I can.
I can hear you. Yeah.
Great. That makes a lot of sense. Thank you. In terms of, well, as a finance professional, and I'm sure we have finance professionals in the audience who would like to understand how they can collaborate effectively with founders like yourself or in the fintech ecosystem without necessarily being entrepreneurs or starting up themselves or being investors. How do you think they can drive innovation in the fintech space?
Yes, thanks. And I think that is actually very important, right? So for me, two key areas, right? One is for the founders out there, they want to solve problems, right? So they really want to solve problems, and at the end of the day, make money solving problems, right? And for the guys in-house, they are pretty much bogged down with the day-to-day running of the business, right? And all the challenges there. So a key thing is being able to, should I say, extend a handshake, right? Being open enough to acknowledge that, hey, these are the challenges that we have in our business, and how can your solution be of help? I've seen a lot of instances where people in-house sometimes think or believe the founders or a fintech is trying to take them out of business or is trying to compete against them. I mean, I am a big fan of collaboration, and the way in which we built CAPSA is to see how we can plug in CAPSA to enhance what already exists and to leverage existing distribution network, right? So I think those are ways in which collaboration could happen. And the collaboration mainly from an efficiency standpoint, right? For the professionals already in-house. Yeah, so that is one big way. Then the other way would just be knowledge exchange between, okay, fine. Like I mentioned, a lot of fintech players don't even really have knowledge of finance. I'm sure many would be happy to pay a token and sit in a finance class and understand the nitty-gritty of finance. What exactly happens? What exactly does a number mean? What are the do's and don'ts? And also, share ideas of how their solution itself is evolving, right? Then we talk about the other things I mentioned, things around capital raise support. I think that itself it's critical. Those are ways in which finance professionals could easily help fintech founders, right? In a nutshell, I would just say being able to create the right space, right? And who is going to champion that? Is it the founders that will champion it or the finance professionals? I don't really know. But there's a need for that proper handshake between people who are in the day-to-day running of a business, who understand finance, and those who understand technology and can build technology to support people who do finance at the end of the day. Yeah. I think there's a lag. Hello?
Dami asked me yet. Okay.
I can hear you now. I can hear you now.
Yeah, there's definitely a lag.
So do you need me to
so
rejoin?
No, I think we can just keep it going. It would regularize itself.
Okay. Yeah.
Yes. So
I
there's
could
a
say a question about pension fund.
Yes.
Yeah, I could say a question about the pension in being too risky. Yeah, I do agree. It's risky, Okay, yeah, I saw it, maybe it's 0.1%. Yeah. I mean, it's not necessary to just take the whole 70 trillion pension fund and go and put it into fintech. No, right?
Mm,
But a certain portion of that can be exposed to it. And because if you look at the tenure of those funds itself, they are long-term funds. These are extremely long-term funds.
mm,
Fintechs are like long-term investment as well, right? So I see, I think with the right framework, the right framework, a portion of that fund could be dedicated. It could be 0.1, 0.2, 0.05, which I mean 0.1 of 18 trillion is a lot of money, right? And you be amazed with the kind of impact it can create. And so yeah.
okay. There's another question for you. Has CAPSA
Okay.
explored the option of funding receivables in Nigeria's healthcare sector?
Yes, we have, and we have. We wanted to go through the HMO route, and
Mm,
there were some intricacies in that space. So between the HMOs and the hospital, right? Um, yeah, it was just a bit dicey because for us it was so the leading hypothesis to that was the HMOs don't pay the hospitals early enough, right? So we could allow the hospitals to unlock cash flows so that HMOs could take their time to pay. But we ran into I won't call it a bottleneck, but it was more of the HMOs pushing back. So the hospitals are very happy to use CAPSA, but the HMOs were not so excited about it, and it was a thing of because they claim they have to verify
mm,
everything the hospital is making, right? But sometimes they claim the hospitals would give out treatment that they're not supposed to give or do things they're not supposed to do just to lay claim on the HMO. So
mm,
they believe a CAPSA would make it tougher for them to verify or the
mhm,
hospitals raising claims. But I do think it's
mhm,
something that is workable, right? It's about both parties being open-minded, um, particularly now from the HMO standpoint, and then we can make it happen. But we are happy to partner with anyone that do have, say, HMOs or anyone they work with within the healthcare ecosystem. And we're happy to look at it if it meets the right risk management threshold for us. By all means, we are happy to fund it. Yes, Dami, you're correct. We are doing alternative. Sorry, can anyone hear me? Just to be sure. Can anyone can anyone hear me? Okay, so pending when Audrey comes back, I'll just speak to some of the questions. Yeah, I could see from Dami. Yes, what CAPSA does is factoring. Thank you so much. Yes, that's but we've decided to take it mainstream. And one of the things I say to people is you can call it uh, factoring on steroid, right? Um, my question is, has CAPSA exploded some funny? Yes. Yes, I've answered that. We've tried that. Audrey, welcome back.
thank you.
Yeah,
The chats logged me out all of a sudden.
yeah. I could see a question
I
on
don't know if you
why
saw.
Nibs,
Yes.
why Nibs was taken off the table for fintech players to
Mhm,
get. Again, to be honest, we don't have that answer. I don't. And it happened all of a sudden, right? Again, perhaps with the Startup Act bringing everybody together to have regular engagements that would address it, right? We don't we there was no explanation. It was just a memo that was sent, and everybody was yanked off, right? One of the things that I heard, and again, not from NIBS itself, was NIBS only wanted to deal with parties that has license from the central bank, right? So if you're not licensed by the central bank, they don't want you to connect to the infrastructure, right? But again, there was no heads up. It just happened overnight and things like that. So, Dami, I don't know if that answers your question. So I can see a question as to how has Japa affected access to talents. Yes, it has. It has affected greatly. Mikai. It has Japa has really affected, but I think the good thing to that is remote work, right? So COVID made remote work mainstream, and for us and for people in the fintech space, it's been easy. I won't say it's been easier, but it's been okay being able to hire talent across geographies, in as much as that itself comes with with an increased cost. But you're able to hire talent across geographies and they'll work for you, right? Regardless of what Japa does. Japa affects talent, obviously, but again, you can still get talent from different parts of the world. And I think for us as Capsa, one of the things which we've been able to unlock is a lot of people concentrate so much in Lagos for tech talent, but we've also been able to assess tech talent outside of Lagos, right? And these are like solid talent people who are good and they don't live in Lagos. They're happy to work remotely in their various states and they just deliver on the mandates. Audrey, I see you're back. Thanks.
Yes, I am. I think some of the questions are out of my.
Yeah, I can see a question from
you can see them.
I can see a question from Mikai as to what are the best things to look out for invest. Again, number one, I always say look at the team. It's very important. The pedigree of the people is extremely important. You can't run the business. You can build a solution, but you can't run the business without the requisite knowledge or expertise, right? Look at the team. Extremely important. What knowledge do they have? What expertise do they have? What have they done before? Talk about your pedigree, right? And if they don't have that knowledge, you also want to see are they hungry for the knowledge? Do they know they need to get that knowledge? And who are they? Do they have the right advisors or people in their space to guide them? Because running the business is tricky. There are a lot of decisions you have to make, and without the right experience to guide you, you likely make a lot of wrong decisions. So I would say for a fintech startup, the team is important and their experience is also extremely important. Then the second thing you also want to look at is what solution are they or what problem are they solving? Is it a problem? Is it really a problem, or it's a nice to have, right? Are they really solving something that is a pain for a lot of people? If it's a vitamin. Yeah, right. Is it really is it a nice to have thing that people can do without, or this thing it's critical and it's a problem? People are really going through this and it's not a vitamin, right? So they really need a painkiller to get it out of the way, right? And then the third thing you will look at is, okay, fine, can this solution scale? Can it bring money, right? And
the unit economics of the business has to make sense. I
was going to say the last thing, if aside from can you bring money, the last thing is the unit, which I was going to speak about, the unit economics. Yes. It has to make sense. So don't let someone tell you, okay, I'm using 2,000 naira to make 500 naira, right? It's so I think for me those four things are quite critical.
Okay. There's a question in the chat box for you. Someone wants to know what mechanism, the policies you want the government to look into for acceleration in the fintech space.
What mechanism? Okay.
Yes. What mechanisms or policies do you want the government to look into for quick acceleration of fintech enhancement for individuals in the fintech space?
So I think for me, the things we have in the Startup Act itself are quite robust, right? It just boils down to people being to the government being able to see it through at the end of the day. And I will highlight some of the things in Startup Act which I think are part of the mechanism and which I think are very critical. Number one is being able to create that regular um, handshake, right, or that consultative forum between players in the startup space or players in the fintech space as well as the government, right? So where government representatives will not see fintech players as people who provide genuine value to the economy, people who create jobs, people who at the end of the month are able to pay people and they can provide for their families, right? So that environment is very very critical, where people can constantly discuss ideas, the challenges they are facing, and how government itself could could help that. Then the second thing from a policy standpoint would be with respect to things around broadband itself, broadband penetration. I again with with the job I did or with the work I used to do in my previous life, right? You think broadband penetration is super high because you live in an urban center in Lagos, but when you go deep down into the data, you now discover that broadband penetration itself it's super low on a national scale, especially when you look at the north that has more landmass and more population than the south, right? So I think genuine policy regarding broadband penetration, it could be even giving tax incentives to people that invest in those infrastructure. The government's not going to invest in it. Maybe some waivers with respect to VAT and the likes. It could also be with respect to the pricing itself for data services, right? Those are the kind of things that would also support the the adoption of of technology solutions across different parts of the country. Then the other mechanism which I also see as being very critical is with respect to investment in talent, right? So today, majority of the things you see with respect to acceleration of the fintech space, talent-wise, has been driven by the private sector, right? So there's been no deliberate attempt, well, except now that the new minister is starting the 3MT program. Um, there's been before now there's been no deliberate attempts by the government to enhance capacity of of young people or the workforce in that space, right? That itself is extremely critical, making making investment in human capital and making it easier for people to acquire technical skills. That way, that would spur acceleration of that space. That would spur innovation, and you see the fintech space grow in a more sustainable manner because you now have people with the right skills and expertise in that space.
Okay, I think I have a question in that regard.
Yeah.
As to what the government can do to encourage innovators in the fintech space. So I
Mm,
imagine that I don't, you being in the ecosystem, you would know how taxation or the fiscal environment impacts your operations in the local market as opposed to
mm,
founders who want to go to Silicon Valley because it's a lot easier for them to navigate there. Do you think that having some tax exemption schemes in the legislative framework for this new regulations and in the Startup Act would make it a lot more easier for fintechs to operate in the local market? And
so
is that a consideration that founders make with regards to
okay.
operating domestically or internationally or scaling in
Mm,
different markets?
so uh, to be very honest, the consideration regarding having operations in Silicon Valley set up outside of the country, it's less about fiscal or
Mm-hmm.
tax incentive. It's more
Mm-hmm.
about access to capital, right?
Mm. Okay.
Because like I mentioned earlier, we've not really had a lot of for a lot of the funding that you find in this space. Many of them are like offshore, the US, Europe. and the likes, right? Majority of these funds are not sourced from the domestic market, which is why I'd say that there need to be a deliberate push from the government or from the PFA, from businesses that have made trillions of billions of naira in this space. I mean, set up 0.5%, 1% of your annual profits. Like if you're going to channel this over the next 5 to 10 years to invest in fintechs and startups, I think that would be helpful. So, in speaking to your question, it has never been a fiscal consideration in terms of setting up options either here or there. It has been more of ability to raise money because it's easier to raise money in the international markets if you identify as a US company compared to if you identify as a Nigerian company, right? So that has always been the key consideration. But nonetheless, with respect to the fiscal regime, I do know that the Startup Act itself made provisions for certain incentives tax wise if you're labeled as a startup, right? If you're labeled as a startup, you do have certain tax incentives, and generally, I think the the Tax Act of, I think that was 2022 itself, allows businesses with less than 20 exempt businesses with less than 25 million naira in revenue from paying CIT, as well as a couple of other things. So I actually think that way the fiscal environment itself hasn't been too harsh on startups or fintechs. This is me as a player and being very honest with you, right? It hasn't been harsh. It's been something that I think shows some sort of progressiveness, right? If the players in that space are willing to do the right thing, right? So if you're willing to go through, register, flag your company as a startup, you're entitled to some incentive. If you're not making sufficient revenue as well, you're also entitled to some incentives and you're not required to pay CIT, right? So I think from a fiscal standpoint, we're fine. It's more from access to capital, and that's why people go outside the shores of Nigeria. I see Audrey is off again, so I don't know if there are any. Sorry, can other people hear me? Just to be sure. Audrey, I see you're back.
Yes, I'm back. Sorry.
Let me just wrap up. I just summarized. I said from a fiscal standpoint,
There seems to be some technical issue.
yes. I just mentioned from a fiscal standpoint, I think we are good. The main challenge is the reason why people have operations outside. It's more from
Okay. I think I got most of that. Thank you. Yeah. So we call it a day. So in terms of emerging trends in the African VC space or fintech space, how do you think finance professionals who are looking to break into the sector or impact in the sector can capitalize on those trends?
Okay, so I mentioned two key trends earlier. One, artificial intelligence changing a lot of things.
Blockchain.
And two, blockchain and the rest. I didn't mention crypto, by the way. I know I just said you said crypto. I didn't mention crypto. So let me just say this quickly, right? I have a long-term view in digital currencies, and I believe in digital currencies, and I think they're the future. One of the work I did in one of my last days in consulting was heavy on digital currencies, and it was a work sponsored by Meta, Facebook, right, about digital currency in Africa, Nigeria, and in Africa. But I'd always said as well that I also don't believe in crypto. Please don't come and shoot me, right? Because it was just too speculative, right? It defies what you call a currency. A currency is meant to at least be stable and used as a medium of exchange, and then as a store of value, right? So if you can use it as a store of value, you can't say because it's a medium of exchange then it's a currency, right?
A currency.
But yeah, so my point on blockchain has nothing to do with crypto. It's more. But do I believe digital currencies would work down the line, yes, I believe digital currency would work. And as central banks across the world work towards getting the right framework to issue digital currencies, i.e., you have in here we have the e-naira, right, which is still trying to get itself. We know China is experimenting with the digital yuan, and we know India also doing the digital P as well. So as central banks find the right mechanism and deploy it mainstream, then you find digital currencies becoming a thing down the line. But that said, with respect to the trends, how could finance professionals coming to the fintech space, right? Audrey, is that the question? Yes. So the first thing I see, right, with respect to finance professional coming into that space, would be things regarding automation of certain things, right? So, i.e., I'll speak to modeling again. I'll speak to modeling for starters, right? I think financial professionals could at any point in time, those that have the strong knowledge of financial modeling, right, could build templates that could be automated, or templates that people in the fintech space could easily use to populate and have their numbers and make that process more seamless, right? Those are areas I think finance professionals could come in and have things like who says I can build a model in less than 30 minutes or an hour by just computing the right things that concerns my business, and then it populates itself and shows me the right outputs. And if I tweak certain things, I see what it, right? Two would also be with respect to automation of finance processes. So finance processes itself could be tricky and could be cumbersome, right? A lot of manual administrative work itself, a lot of back and forth, right? So those are areas I see a lot of collaborations between people in finance and people in the fintech space to say, how do we take care of some of the back office operations in finance? How do we take care of those things? How do we make it more seamless and save time for everyone in that space, right? So that is one automation of finance processes is another key area that I think finance professionals could easily come in. Where else do I see finance professionals coming in to help fintech guys? I think I mentioned all of them earlier: capital raise, financial analysis, but automation of modeling. I think that would be huge if you ask me. Using AI. Audrey, I can hear you. You might have muted your mic.
Can you hear me now?
Yes, I can.
Right. So I said we're going to have to call it today, where our time is fast spent. Thank you so much, Mustafa, for joining our November session. It's been a very enlightening session for people who were here. And I'm sure that if there are people who have questions for Mustafa or Kapsa, please, you can leave it in the chat and we would forward them to him. Thank you, everyone, for joining. We'll be here again next month with another insightful session. So have a great day.
Yes, thank you so much. I just saw a question here about Naira raises. Absolutely.
Wow.
Absolutely.
Oh, yes, Naira raises for startups. Yeah.
Absolutely. It makes no sense.
Yes.
It makes, I mean, with the exchange rate, definitely everyone.
Yeah.
Okay, thank you, everyone. Such a pleasure. Thank you, Audrey. Thank you. Do have a great day and stay safe.
Have a great day.
Yeah.